Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, we're very pleased you've joined us for our next live presentation from Ledyard Financial Group. Before I introduce our speakers, a few points to note. Please submit your questions in the question box to the left of the slides. If you're interested in scheduling a meeting with Ledyard Financial Group, please click on the Meetings tab found on the left navigation bar. You will be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Josephine Moran, President, as well as Peter Spruge, Senior Vice President and CFO of Ledyard Financial Group, which trades on the OTCQB venture market under the symbol LFGP.
Good morning. Good afternoon. Whatever it is.
Good afternoon, everyone. Great to be with all of you. I'm Josephine Moran, President of Ledyard Bank. Just very quickly, I've been in the financial industry for over 25 years. I've been with Ledyard Bank for a little over a year. I am here, we'll go through the slides, but I'm here as part of the succession plan for the bank. The majority and vast majority of my background has been in retail, investments, residential and consumer lending, cash management, and digital. And Peter, I'll turn it to you to introduce yourself.
Sure. So yeah, I'm like Josephine. I'm newish to Ledyard. I joined about 6 months ago. Josephine's been here a little over a year. My background is also in banking and bank-like institutions, mostly coming out of a treasury background. So lots of experience with investments and risk management and those sorts of things. Let's dive in.
Ready to jump in.
Okay. Trying to get the slides to move here. Bear with us. So forward-looking statements, we're not going to read this word for word. I think you probably all know kind of sort of what it says. So we'll move on to the next slide.
So I'm going to kick off the presentation just to give you a high-level overview, and we will be getting into all of this within the slides, but we have a very unique business model. It's very poised to grow, and we're going to talk a lot about that, including our strategic plan today. We have a very long-standing, and we are a very, very highly reputable community bank in our markets. Our market presence right now is New Hampshire and Eastern Vermont, Southern New Hampshire, Eastern Vermont, Upper Valley. We've had a lot of success and growth in the Concord market. We'll also speak about that. And part of our unique model is we have a very strong wealth management business, unique banking model. We have about a little over $730 million in deposits, but we have nearly $1.8 billion on the wealth side. So we'll get into that a little bit as well. And we have a very strong track record of financial performance. We've had very consistent earnings, excellent performance, great track record with very stable leadership. We have excellent credit experience, low cost deposits, and very, very loyal customer base. So just to give you a little bit of background about the organization and the company overview, we've been in business since 1991, a little over 32 years. We're headquartered in Hanover, New Hampshire, and about $743 million. That is as of 2022 year end. We have 7 banking locations that are located within our footprint. And we also have 3 financial advisor locations that are both in New Hampshire and Eastern Vermont. Our performance has been extremely strong. 2022 ROA and ROE of 0.94 and 13.294% respectively. We have a very, very loyal and attractive deposit base, low cost deposits, 37% of our deposits are non-interest bearing. And we also have a market-leading wealth business, which I discussed before. We have a very, very unique model around our wealth business. Most recently, we're almost up to 1.8 billion, generating revenue of 3 million in Q4, and also it's great non-interest income. We're also ranked among the top 200 publicly traded banks under 2 billion in assets in the United States by American Banker. So that was something that we're very proud of. Just to give you an overview of senior leadership, you've met Peter and I. Kathy Underwood is our Chief Executive Officer. She has been with the bank for 18 years, extremely successful, unbelievable background, credentials. She is part of the Federal Reserve, and highly, highly regarded and respected in the community and in the industry. And she's done an excellent job of growing the bank and bringing it forward. Michael Hakoun is our EVP and our Managing Director of Ledyard Financial Advisors. The financial advisors team is not a subsidiary of Ledyard Bank. It is a business line of the bank, which is another part of the unique model. But he runs the entire division. He has over 20 years of experience in investment management and banking. And prior to coming to Ledyard, he had a very long-term career in TD Bank in New England. And he managed over 250 branches. So very strong executive leadership team. Give you a little bit of background on our company history. The reason that we actually exist is that within the Hanover market, a lot of the community banks were being bought up by the larger banks. So a group of local investors, a lot of them, we are located right near Dartmouth. They came together and they formed Ledyard National Bank. And over the years, I mean, you can read through it, but through the years, we have experienced substantial growth. 2005 is when Kathy joined us. Ledyard Financial Group was formed in 2007. That was the holding company for Ledyard National Bank. I'm going to talk a little bit about the Concord market because I think that's very important. We were highly concentrated in the Upper Valley, which is an extremely affluent area and, very well suited to grow our wealth business. But in 2016, we had a unique opportunity to move into the Concord market. We had a team lift out over there from a bank that was merging with another bank. And that's how we started our footprint in Concord. That was extremely successful. And then in 2020, during the pandemic, we were able to open up a branch. We call them financial centers. And that financial center in just a little over 2 years has grown to $35 million and it's been an extremely successful market. And our model, when we go into a location as we grow, our model is to have all of the partners there: financial advisors, private banking, portfolio managers, commercial lenders, residential lenders, and a branch there to service our clients. So we have one-stop full service relationship type that we can offer our clients. And then we talked about what happened in 2022, so we can move on from there. Just to give you a little idea of our market here, I did talk about it is Upper Valley. Most of the employment here is through Dartmouth College, Dartmouth Hitchcock Medical Center. Those are the large and pertinent employers here. We also have Hypertherm and also the U.S. Army Corps of Engineers. So it has the highest number of businesses, employees, and self-employed of any similarly populated region in the United States. I think that's a very, very distinctive characteristic of the area, and that's based on the U.S. Census. Lebanon, New Hampshire, which is right here in our footprint, is listed as having the largest change in the net migration during COVID. So people moved here, which is great. Hanover was ranked the number one place to live in New Hampshire. And that was according to niche.com in 2021. The median home value within the market is $550,000, and the household income, the median household income is $105,446. So that gives you a very good idea of the market that we are working in, and it's got very highly educated workforce, and you can see the industries, but 82%, nearly 82% of residents have a bachelor's degree or higher here. So I talked a little bit about our footprint expansion into the Concord market. So, and our model, but this was the roadmap and model for all of our locations. We are currently in the process of upgrading all of our financial centers, so they have that high-tech, high-touch approach. And the model for our organization, we call it One Ledyard, but basically when you come to a financial center, you have full service options. And as we grow, we do want to expand further into southern New Hampshire. That's one of our strategic priorities. The model will be that we have all of our business partners there to service our clients. And also the other thing is digital is going to be something that we talk a little bit about too. That's a big part of our strategic plan. So just to give you some highlights about 2022, was a very, very, very successful and busy year. We had I have to say that the executive team before Peter and I and the board here had an exceptional succession plan, extremely prepared for retirements and things such building bench strength as well as hiring externally. So we have a really, really good mix here. Obviously our CFO, who was here for 18 years, retired at the end of the year. We had a great succession plan with bringing Peter on and had some fantastic overlap. I'm also part of the succession plan and have been working closely with Kathy and transitioning over the last year and a few months. We hired an excellent, through a retire, head of HR, and Michael Hackoun is fairly new as well. Also completely planned another retirement. So we were very busy on that front, hiring great talent and promoting from within. We were named one of American Banker's top 200 community banks, and that has been several years in a row. We were voted the #1 financial advisor by clients in the greater Concord area. And remember, that's a new market for us. And also the #1 financial planning firm in the Valley News Reader's Choice, which is here in Hanover. Business New Hampshire, we were voted best companies to work for, not best banks, but best companies to work for in New Hampshire. We raised $18 million in subordinated debt, which was a very, very successful raising. That was to support our capital levels and fuel our expansion plan, which is part of our strategic plan. We made another thing that I want to talk about is we have an exceptional board, highly engaged, all local from the area, very involved. Bruce King, who was on the board since 2014, was named the chairman of the board of directors and is doing a fantastic job. Talked a little bit about the financial center transformation. So we renovated our Norwich, Vermont location. And we are in the process of completing our Main Street location, and we have more that will be planned so that through the next couple of years, every single office will be renovated with that high-tech, high-touch. We posted 10 consecutive quarters of record earnings. So one of the things that we've been working on very, very diligently through the fourth quarter of 2022 was our strategic plan. It's a 3-year strategic plan. The three key areas of focus are three, we call them the three legs of the stool, to drive growth, to deepen client relationships, and also to engage employees. And around the client relationships, it's also very pertinent to client experience. And we're looking at the digi-physical approach. So it's our word, but digital first is extremely important, but we want to continue to provide out to choose to bank the way they'd like to bank, but we still want that human touch. So we want that the relationship piece is extremely important to us. And in all that we do, whether it's our model, whether it's the way we're dealing with clients, it's all around relationships. And our long-term vision, our big, hairy, audacious goal, and our rally cry is 1, 2, 3, one Ledyard, and that's the integrated approach to client relationships. We $2 billion in assets and $3 billion in assets under management, and that's our long-term goal, not our 3-year strategic goal. We have very specific strategies around 3 years, but those 3 years will be the building blocks to get to our BHAG. And we really want to be the bank that makes life better. That's our vision statement, to be the bank that makes your life better. That's really important to us, and that is what we are striving for. So I think, Peter, I'm going to turn it over to you to talk about some financials.
Okay. So before I turn the page, I'll just say a couple things about the balance sheet and income statement. And there is a ton of data in the deck itself. And actually, before I do any of that, before I forget, there's a statement made early on by the lady who introduced us about opportunities to meet with us. Unfortunately, Josephine and I are not available tomorrow. We have all-day board meetings, and Friday was otherwise committed. But we would be delighted to meet with any of you who are interested in speaking to us at greater depth or learning more about stuff. But just please contact us separately. But it won't happen through the portal that they have set up, because we are not, unfortunately, available to participate in that. So that said, balance sheet and income statement, right? So balance sheet for Ledyard is a little unusual in the sense that it has a relatively large investment portfolio relative to peers. But the upside of that shows up in a couple places. One is we have very strong liquidity, in part driven by our deposit base that Josephine mentioned a moment ago. The very loyal deposit base with some very attractive pricing, nearly 40% in non-interest-bearing deposits. And relatedly, but separately, we also have a very strong capital position. We did a sub-debt offering in April, I believe, of 2022. Almost perfectly timed with hindsight. Give credit to my predecessor for having the prescience and the perfect timing to get it done like the day before interest rates skyrocketed. So that provides a great capital cushion for the balance sheet. Income statement wise, we have kind of two primary sources of revenue. One, of course, is the stuff that's on the balance sheet, so loans against deposits. And then we have the wealth management business, which generates, roughly speaking, about 40% of our revenues. So that is also outsized sort of relative to our balance sheet size, but we do enjoy having that non-interest revenue flowing in. So there's already a couple of questions I see about our deposit profile and mix, and I'll touch on that in a couple of slides. But if we go to the next slide here, again, I'm not sure it's worth reading all these off. Certainly, you guys are able to see them and reference them later and ping me later if you have questions. But the key points here are, the growth in the balance sheet has been consistent over time and substantial. The profitability and the profitability metrics also above average, and certainly targeted to be well above average going forward. Balance sheet, very strong capital ratios. All of our regulatory ratios are well in excess of any requirements. And one thing we have not yet talked about too much is the asset quality. So we have an extremely high quality credit profile. If I looked at the charge-offs that we've incurred in the last couple of years and plotted out how many years of coverage we have in our current reserves as of year end, you would be astounded. That number is probably like 200 years. What basically tells you is that we've had virtually no charge-offs in the last couple of years. More realistically looking at it, we looked at charge-offs that we've experienced in the last 15 or so years, picked the worst year, and our allowance at the end of the year would have covered us, I think, about 2.5 times the worst year that we've seen in the last 15 or 16. So it's not quite capital, but it's effectively the same as capital, and it reflects both our strong balance sheet as well as our strong credit profile. We'll move on to the next slide. So our loan portfolio, one thing that is also a strength, if you will, of our balance sheet is the diversification. We don't have any particular industry concentrations. We do have, if you want to call it that, a concentration or a focus on real estate. So that is primarily our business, both on the residential side and the commercial side. That is our bread and butter, if you will. But we don't have a unique industry concentration such as some of the players that have been in the news the last few days. On the deposit side, so again, you can see a very large portion of our deposit portfolio is in demand accounts. So I'll take a minute here and toss in a few things that are not on this slide, but certainly have been pertinent in the news recently. So someone asked a question, what % of our deposits are uninsured? So those of you that have been paying attention have heard certainly that Silicon Valley was in the 90 plus percentile, or 90 plus % of their deposits were uninsured. Our number for that metric is about 20 to 25%. So we are not even in the same zip code or the same state for that matter, if we're going to use a geographic analogy. Another point of diversification that matters for our deposit portfolio is the retail versus business mix. So we are roughly 70% retail, roughly 30% business. Again, that's not a perfect number, but it rounds to that. And as a rule of thumb, that's a good description. So the other thing that's been really good is we have certainly experienced very low deposit costs. Of course, with rates going up, we expect that to change a little bit, but we have yet to see it materialize dramatically in our cost of funding on the deposit piece of our portfolio. So we continue to enjoy a very loyal depositor base that is not looking to make a ton of money off of our deposits. As Josephine mentioned, we are very much relationship focused, and we do not necessarily compete solely on price. So just because our competitor down the street hangs a big shingle in the window doesn't mean that we're going to chase that. We provide value in other ways. The investment portfolio. So you can see this, I mentioned, we have a relatively large investment portfolio. It is split not quite 50-50, call it 40-60 between AFS and HTM. There was a question also in the Q&A about the duration of our securities. So it's probably in the vicinity of 8 to 10-ish, I think would be a fair description across the HTM and AFS portfolio. So you can see in our in the little chart over there, the yellow line is I'll make sure I'm reading that. Yes, that is our yield, and the line below it is the portfolio yield on our peer group. So we have historically been very focused on this as a source of revenue for the bank, and that shows up with some higher returns. This is our wealth management business. So you can see the chart on the left. Assets under management, fluctuates a little bit with market moves. Certainly, we are down a little bit from where we were a year ago, I think, as the rest of the world is in terms of their asset values. And on the chart on the right, you can see the greenish, yellowish line kind of represents what portion of our revenues is represented by this business. And as I mentioned previously, it's in that 40 to 45% range. So this is a business we like. It's all off balance sheet, requires nominal capital and is very very favorable. So again, profitability ratios. So you can see the ROA focusing on that in the upper left-hand chart, generally in the 100 plus basis point range. You'll see the fourth quarter of last year drop down. We took the fourth quarter to do some restructuring of our investment portfolio. And so that's a one-time blip that you will not see repeated. And if you see the net interest margin on the lower left, sort of a more interesting and telling metric about where the future is headed. This is a net interest margin on our balance sheet business. So apart from the wealth business, you can see that our net interest margin is trending up. I guess loans to deposits, I'll comment on the lower right. Back to our liquidity profile, very strong, and we are not concerned on that front at all. And I guess another question did come up. I'm not sure I'm reading it right, but someone asked about essentially about our deposit flows in the last couple of weeks, and we are unsurprised but delighted to report that we've had nothing of substance. So our customers are happy where they are, and we've actually had speaking
Inflows.
from
We've had inflows.
We've had some inflows. I've actually fielded calls from a handful of folks who are looking to buy our stock. So we have not. Despite the contagion risk, we have not seen any ill effects of that in the last couple of weeks. Again, capital and credit quality, I mentioned that a little bit. The lower left-hand chart, it gives you our net charge-offs. You see it fluctuates basically around zero. And our reserves at the end of last year, about 1%. You can see that was down somewhat from the sort of recent past, which was more like around 2%, using round numbers. The reason for that was that at the beginning of the pandemic, there was a huge provision taken to increase the reserves. And having now felt like we're largely past the pandemic and having not seen any ill effects in our portfolio from that, we essentially undid that pre-pandemic reserve. And I think that may be the last slide. So we'll go back to some questions here. Let's see if there's something that we haven't touched on. Okay, so there was a question about our reserves have been around 2%, and now they're around 1%. If the economy slows down, do we have enough to build up a provision to historic levels? Well, so there's a two-part answer there, I think. I think I talked a little bit about how they went from 2 to 1, basically undoing the pandemic paranoia, if you will. And we certainly feel that the earnings strength of the balance sheet is enough to cover any additional reserves that we would need as we grow the portfolio. Let's see, we talked about duration of securities. Okay, so the question about unrealized losses on our investment portfolio in general, it's also a topic that's in the news a lot lately. Ours, I don't want to quote anything that's on your off schedule here because it's not public yet, but we are not concerned. We're actually, obviously, as I think the rest of the world is, seeing an improvement in the last couple of weeks with rates generally trending down. So the AFS and HTM marks are recorded and we'll be out with our financials in fairly short order here. But we are not concerned, and nor should you be concerned that they are oversized.
I'm going to take this question.
Go for it.
Can you expand more on the One Ledyard integrated approach to client relationships? So I talked a little bit about that. When we meet with a customer, it's not just about one product or one thing or one solution. It's an entire integrated approach. So, for example, if we have a wealth client, our advisors are speaking to them about their banking needs, their overall picture, their insurance needs. And we have the capability of providing all those financial solutions. That is the same thing. We have a very robust private banking business line that we reintroduced. That was part of 2022's plan to reintroduce that last year and to enhance it. And our private bankers are working very closely with all business lines to deepen and enhance and provide concierge service relationships. And that's really across the board. But they kind of act as the quarterbacks and make sure that we're not missing any opportunities for our clients and that we're really working closely with them and solving all of their financial needs.
Okay, so I see that we are officially out of time. So maybe I'll just reiterate that we would be delighted to have further conversation with any of you. Unfortunately, we can't do it through the official website.
You want to give them your email address?
Yeah, I will give you my email address, and certainly ping me with any questions or interest you might have. So my email address is peter.spruge, and I will spell that for you. I've done this about 600,000 times in my life. S as in Sam, P as in Peter, R as in Robert, U as in Uncle, D as in David, Z as in Zebra, S as in Sam, at ledyard.bank.
Thank you very much.